Hello everyone, welcome back to my YouTube channel. I hope all of you are doing great and welcome back to another video of weekly index review. So if you remember, in last week video we discussed and we looked at few indices: Nifty, Bank Nifty, mid cap and small cap, IT, auto and FMCG. And as if you remember, the short term trend was negative and we identified some support and resistance levels for this week. And as you can see, this week market fell around 4-5%. If we take example of Nifty, Nifty fell around 4.16% or 738 points, and Bank Nifty is also fell around uh, something like 5% or 1950 points. So let's see what's next. And before we get into the video, uh, standard disclaimer: I'm not a SEBI registered analyst. Any stock discussed here is not a buy or sell recommendation. Please consider your financial advisor before taking any trade or investment. So let's start with the Nifty. If you remember, we marked some support and resistance levels, and these were our two support levels. If you remember, the Nifty gave uh, head and shoulders breakdown last week. You can see this candle. If you remember this candle, Nifty gave head and shoulder breakdown last week, and we identified two support levels. First one was uh, seven. First one was around 17,600, and second one was at 17,250. And as you can see, this week Nifty has violated both the support zone. In the middle of the week, Nifty tried to take support around this level. As you can see, the level we had marked in last week when we reviewed Nifty, 17,250. It tried to bounce back, but again a small pullback, and again it faced resistance at 17,600 level and broke this support as well. So right now the current price of Nifty is 17,026 and it's completely bearish. As you can see, although the long-term trend is still intact. As you can see, Nifty has risen very well, and the long-term trend is still intact. It's just that the short-term trend for next few weeks is negative, and unless we cross this level of 17,600, I won't recommend going long, especially not going with heavy positions. So what should be our next support? Our next support would be this level of 16,700. Nifty violated this, and our next support would be 16,700, and our final support would be around 16,000 rupees, which is 200-day moving average. If in case Nifty violates this level of 16,700, then our medium term trend would also be bearish. It's There's so much panic right now because even though Nifty has only corrected like something like 7 to 8%, like 8.5%, but the individual stocks has corrected 10, 20, 30 and even 40%. Some stocks have corrected even 40%, and there's a lot of panic because most of the people have bought them at very high prices, and most of the stocks are down 30 to 40% from their peak. But right now is a very good time to keep adding good fundamental names. And as for the trades, I won't recommend it going long on Nifty as long as it's below 17,600. So now let's take a look at Bank Nifty. Bank Nifty is even a is even worse situation. As you can see, these were the support levels we marked previous week: 37,700 and 37,230, and Bank Nifty violated both of these support. Again, similar structure like Nifty, a small pullback, tried to pull back a little, but again fell, and right now it's even closer to 200-day moving average. So the next support level for Bank Nifty would be 35,000, 240, or that would be the 200-day moving average. Again, same, I won't recommend going long in Bank Nifty, especially as long as it's below 37,700. If in case it takes support at 200-day moving average and bounces back a little, and if it closes above 37,700 and with good wide range candles, then going long would be a better idea. As of now, uh, stay away from the index, focus on individual stocks. So now let's take a look at the mid cap index, Nifty mid cap 100. These were the levels we marked in previous week video, that is 29,840 and 20,860. So as of now, mid cap hasn't violated this level, but looking at the momentum, looking at the white range candle and the new COVID variant, which has created a lot of panic in the market and in the mind of people, I think it's pretty much possible that it will violate this support level and our next support, and it can violate this support level and it can go down to this level. So our next support level would be our main key support level that you should watch for is 28,860. And in case this week things get better and market stops falling and it can consolidate at this level a little bit, because it hasn't violated 29,840 as of now. It's taking support at this level, and going long would be only above this level of 31,100. Till then, sit on the sidelines, do nothing, focus on individual stocks, add good fundamental names. Same thing. And in the case of small cap also, 200 moving average is very far right now. It's around 9,700. The current price is 10,700, so it's around 1,000 points away. So this was the level we had, support level we had marked in the previous week's video, 10,580. So right now it hasn't reached this level, and I think it will act as a good support, and in case it violates this support, this would be our next support level, 10,430, and after that our last line of defense is the 200-day moving average. But as of now it hasn't violated, so mark these levels. You can keep these levels marked in your charts, like the first support which we marked previous week also, which it hasn't violated yet, that is 10,580. Let's keep it 10,580, and our next support level would be 10,430. Second support level would be 10,430. So keep these levels marked in your chart and watch for these levels. Now let's come to Nifty IT. As you can see, Nifty IT is doing nothing, just moving in a range, and it's the previous trend was very amazing. Nifty IT had a very great bull run, and the long-term trend is still nothing. Previously also it consolidated for a few months and then again gave a very brilliant move. Right now it's a little bit more negative if we combine the fundamentals. Many IT companies are facing margin pressure and all, and if you look at the index is also doing nothing, just moving in a range. First it formed a kind of a double top, but it didn't give a breakdown, and again it went up. Now it's kind of forming a descending triangle. So descending triangle is nothing but it's not bearish, or it's not like, descending triangle can be both bearish and bullish, depends on which side it breaks out. And looking at it right now, it looks like the sentiment is whole negative and there are high chances of a breakdown. So right now stay away from IT, let it give a clear breakout from the upper side, clear breakout or the clear breakdown. Till then wait on the sidelines in case of IT. So now let's come to Nifty Auto. As I discussed in previous week's video, going long on auto right now is not a good idea. Let it cross the all-time high level, and this time it did the opposite. It kind of formed a we can call this a double top kind of a pattern, and it gave the breakdown. This was our support level of 11,090 and it gave a breakdown, and now it's our next support level would be the 200-day moving average. So why every index or stock is going back to the 200-day moving average? This concept is called the mean reversion. As you can see here, mean reversion is a financial term for the assumption that an asset price will tend to converge to the average price over time. So what this basically means, uh, the stock price can deviate away from the average, and the average in this case is the 200-day moving average that we are using. The stock price or the index or any asset price can deviate away from it for a given time, or like it can stay away from it for quite some time, but eventually it will lead back to its average, that is the mean or the average, same thing. As you can see in this case, it went away from the mean, but again it started consolidating, going down, consolidating, and again tested the average, and now it's doing again, it again deviated from it, and now it faced resistance at the previous all-time high level, and the whole negative sentiment combined and the bearish trend, and now it's again coming back to the mean. So next support, our next strong support zone would be the 200-day moving average, that is around 9,350 rupees. So now let's take a look at Nifty Fmcg. As I told you last week, Nifty Fmcg does not look good, especially as long as it is below this level of 39,400, and this week it broke the support which was around 37,880. In this case also it's going back to the mean, same concept. Price deviated away from the mean, that is our 200-day moving average, and it consolidated for a few weeks, and then it fell down, and now it's going back to test its mean because it haven't tested its 200 moving average from since November 2020. So our next support would be around 36,770 rupees, that is 200-day moving average. So there's nothing much to do this week, just focus on the individual stocks, and the index are not in a very good position. Nifty is also weak, Bank Nifty clearly weak, Bank Nifty is even weaker than the Nifty, both mid cap and small cap also weak. Nifty, wait for Nifty to give any clear direction either on the upside or on the downside. According to me, I think it can give a breakdown on the downside. So right now stay away from IT, let it give a clear direction, stay away from auto, and let the Nifty cross 17,600 and Bank Nifty 37,700. Till then, it's better not to go long on the index and focus on individual stocks. Find the stocks that are making new high even in this weak market, because those are the strongest stocks and they will give the best move in the shortest time period. Because as a trader, we need to get as strong move as we can get in the shortest time possible. So stay away from index, focus on individual stocks, and look for the stocks, in case of trading, look for the stocks that are making new highs. And if you are a fundamental investor, then it is a very good time to keep adding, because most of the stocks and indexes are going back to the mean, and they will probably bounce back from that level. That was it for today. Mark these levels in your chart, and next Sunday we'll again review all these indices and see what's going on. So this was it for today's video. I hope you enjoyed it and learned something, and if you learned something, please consider hitting the like button, and don't forget to subscribe and share. Goodbye, take care.